Just to recap, the new government India has just elected a BJP government with a massive majority, and this is the first time since independence in India that we've had a centre-right BJP government, very much with a growth agenda and a reform agenda. So I think a lot of people were looking at this budget as with a huge amount of hope that we'd see the magic wand waved and a whole lot of problems will be addressed. Now, this government's only been in power for 45 days. The issues that it faces are massive and in multiple different areas. It's not just one little area with a quick fix. It's almost comparable to when Maggie Thatcher took over in the late 70s. There is a huge amount that needs to be done. Now, this government has telegraphed repeatedly into its manifesto and after the election that it will deal with these problems. However, I think markets had expected them to deal with them all now in one hit. So we had the budget yesterday. From our perspective, it was quite a pragmatic budget. They dealt with all the issues that we wanted them to deal with, or at least they carried on talking about the issues. So basically, they focused a lot on fiscal consolidation. The government government borrowings are still too high. They spoke about how they would deal with that. And they've also spoke about pro-growth policies, about how they're going to get India growing again. So there was a lot of measures of reintroducing incentives for infrastructure investment. Anybody who's been to India knows very well that from an infrastructure perspective, there's so much that needs to be doing. So they've introduced new measures there, predominantly at the financial sector, to encourage banks to lend again to infrastructure companies. So overall, I'd say the intent was right. The message was right. If there's a slight niggle, and there always is usually with these things, is actually some of the detail was missing. From our perspective, the main positive, certainly the biggest positive, was something that I briefly already talked about, which is the push towards getting the India infrastructure sector going again. If you look over the last few years and the amount of roads built, railways, etc., the whole infrastructure space has come to a grinding halt for various reasons. And a lot of that is down to implementation issues, which I think this new government's addressing. What it's also addressing is that they made a number of announcements to make it a lot easier for banks to lend to infrastructure and how they account for that. So it's encouraging the banks to start lending again. So that's a big positive, and ultimately we think that will boost infrastructure lending, which should, entwined with the other fact that implementation will get better, we'll see a pickup there. So that's good. That's not a story that's going to happen overnight, but that's over the next 1 or 2 years we should see quite a big kick in there. The other positives over the last couple of years, there were it came through with a few newspaper reports about FDI, foreign direct investment in India. And I think over the last couple of years, some people got worried that India is not a place where they want foreign direct investment. That's simply not true. The headlines previously were all about foreign direct investment in retail. Now, there was no mention of that. This time around, they've said they have just upped the limits for foreign direct investment in defence and insurance. Now, these are two small, fairly major sectors. India is one of the world's biggest defence importers. And therefore they want to try and develop their own domestic industry a bit more and encourage more foreign investment. But secondly, more importantly for us, is the push up in insurance as well. That's quite a positive. It's going to encourage a lot more foreign capital coming into that space. So those are two important areas there. The other one, which the real estate market in India has been suffering over the last few years, there is effectively no REIT market. Now, REITs are real estate investment trusts, and they're a useful vehicle for property companies to put various yielding assets into. And there are no REIT indexes in India as it stands today, and there's some moves that they're going to encourage to begin to have REITs in India, which is very positive for the real estate sector. Lacking a bit of detail, but it's the right sort of noise. So those are the main positives. The areas really focused on just that detail, a lack of detail. So one of the key reforms for us is the introduction of a GST, a goods and services tax, a uniform GST across India, because each state in India has a different level of sales tax, and it gets very confusing for people and companies. So by introducing a uniform rate, it'll have huge ramifications for Indian growth, and it will be a very positive event. Some people were hoping that would be introduced and that by the end of this year that actually might be implemented. I think that's unlikely, and really, again, the government this time said yes, they're committed to bringing it in, but didn't give a time frame. Now, we're quite comfortable with that. We always thought it was a 2-year sort of story. So some people were disappointed there wasn't a time frame there. The other issue, as I talked about REITs before, there wasn't a set time frame for when they're going to do that. So there was a little bit of a time frame niggle, if you like, that they could have been a bit more explicit about when they want this stuff put in. There wasn't a great deal on reforming the subsidy side. Indian government is, on the deficit that it's currently going through. One of the biggest reasons for that is because of the subsidy programs they're running. Everybody knows they need to try and deal with that. Again, there wasn't a great deal of focus of that in this budget. To us, that was perfectly understandable. 45 days into a new administration, it just simply was unrealistic to expect that all of these problems could be dealt with already. So that can be done outside the budget. We're happy in that area. But again, some people were a bit concerned there wasn't much talk. And the final point is on the fiscal side, so on the government borrowing side, they've reaffirmed the previous government's targets. Some of those targets are going to be quite difficult to hit. Those were there's some assumptions built into hitting those targets which will be difficult. In reality, no. We didn't alter our portfolio a great deal going into this election. We don't buy stocks because of a political event. It has, however, had implications for some of our holdings. So we have some companies which do have large insurance operations with minority foreign partners. So for some of those companies, there is a possibility that they can sell out an increased amount to their foreign partners. So that'll be positive for those counters. We think it's positive for the banking sector, the reforms in the infrastructure side they've talked about. That'll give a bit more clarity on earnings for banks. Certain banks that are exposed to those sectors, it looks actually quite good. So we're positive on that front. I didn't talk about it. There were a few minor sort of boosts to urban consumption, some various increases in allowances for owning a house, and a few areas like that net will be positive. So, we're not going to suddenly change our entire portfolio over one budget. The portfolio that we've got is really built in mind, 3, 5, 10 years hence. But net, I think, how does it affect our portfolio compared to perhaps the index? And I would say probably we're in a better position than the index. Okay, so we've had our budget. What does that mean for actually investments, and should I invest in India? Is the India story changed from one budget? Well, of course not. It's just one very short budget. It doesn't mean policy making is now frozen to the next budget. So, have they reiterated what we were looking for? Yes. Is this new government, who were elected on a pro-growth reform agenda, gone back on their word? Certainly not. So we are still extremely positive that the longer term outlook for India really has got a great deal better with Narendra Modi in charge than as opposed to not having him there. So the India growth story remains extremely compelling. If they produce and deliver the sort of reforms that they've talked about, then India is simply unignorable from an equity and even bond market perspective. It's an incredibly pervasive and very attractive destination for investment going forward, because not only have you got a reformist government who's going to try and deal with a lot of the long-term structural issues that India has faced, in combination with that, you've got probably some of the best corporates in Asia that you can invest in, with very good managements, with extremely clear strategies. So you put those two together and India becomes very compelling. And so, net, we are very comfortable with the India story, and one budget doesn't change it.